Hello and welcome back. My name is Max Crampton Thomas, and I'm the regional editor for the South region of Capital Analytics. Today's video is brought to you from the Invest Nashville 2022-2023 launch conference. The panel focused on today is financial fortitude, how Nashville's financial leaders are responding to regional growth in a shifting landscape. The moderator for today's panel is Ms. Ryan McLaughlin Wood, the South Central Market Head for UBS Wealth Management, and our panelists included Mr. Lee Blank, Market Executive for Regions Bank, Mr. Johnny Moore Jr., the Regional President for Truist, and Mr. Bradford Vieira, the Executive Vice President and Regional CEO for Service First Bank. Don't forget to like and comment down below, and we hope you enjoy the video.
I have to echo Marshall and just say thank you for having all of us. It's great to look out here and see so many familiar faces. So I'm Ryan Wood. I have the privilege to work at UBS in wealth management, but I also had the privilege to grow up here. And so I'm hearing a lot about the changing landscape in Nashville, and I see it firsthand. So I just moved back this summer and it looks a lot different than it did when I left in 2005. So I'm thrilled to be back. Now that's gonna be a hard panel to follow. They were singing, there was the real estate rock stars. So we're gonna take ideas from all of you on the finance. It's the real estate rock stars. Well, by the end of this, hopefully we'll have.
Are you gonna sing?
I'm actually not gonna sing. I was hoping you would though.
We can hum.
Not a chance.
That's perfect. That's perfect. So what I'd like to do is, like Marshall, I have some questions for all of you. I think feel free to jump in. I can put you on the spot, whatever you all want to do. I would say we don't have that much time. So if there's a question I ask and you feel like they already covered what I would say, we'll just go to the next one. And then I do have a few for each of you. But let me introduce our panelists. And again, thank you all for being here. So Johnny Moore Jr., Regional President of Truist. We've got Bradford Vieira, Executive Vice President and Regional CEO for Service First Bank. We've got Lee Blank, Market Executive for Regions Bank. So again, thank you all for being with us. Okay, let's get started. Keeping with the theme of change, over the last 2 years, we have seen businesses conducted at a breakneck pace with almost insurmountable demand across a variety of sectors. Now there's talk of a correction. How should we contextualize today's current environment when looking at the last 2 years, and why does that matter when people talk about a potential recession? Everyone's favorite topic. Who wants to start?
I guess I'll start.
Thank you. You're brave.
Okay. I mean, that's a big question. That's a question that's on everybody's mind. And everybody needs to understand the Fed is always in a reactive mode. So they see what's going on in the economy, they make adjustments, they see do they work. If they don't work, then they make an adjustment. So the only thing about that approach, you're never going to be perfect. It's more of a shotgun approach versus a rifle. So right now we're dealing with interest rates and trying to get the economy stabilized, inflation down. But guess what? Last week we got an incredible jobs report. So that goes right in the face of inflation settling down. You still got employment high. To really calm down the economy, you got to see some job loss, which takes off the pressure of inflation. And until you really see that, the Fed's going to keep their foot on the pedal. So that means rates in the future are going to continue to go up. And as they go up, you have housing markets going to be impacted. Even though we say a 6+% interest rate, is high now compared to when we could get 2.5, 2 years ago, but still you're single digits, and still it's a good time to buy a house.
You're right, Johnny. And I think what people need to remember too is everything pivoted so quickly. I mean, we went from a situation with historically low interest rates, coming off the pandemic. Everybody was flush with stimulus money. The banks were flush with liquidity, and everything was just hot, hot, hot. And then, so I don't think anybody's surprised that we are facing what we're facing, but you're right, Johnny. I think we need to keep in mind, it's all relative. We're not talking about 10 or 12% interest rates. We're still talking about single digits. But, I think I'm biased with Nashville. I think Nashville's the greatest place on earth, but I think, very resilient economy. And I think we may have some corrections here and there, but nothing major.
I would echo what they said. First thing you learned is you don't fight the Fed. And then what the gentleman before us said is, quality projects, quality people that make smart business decisions, When you're in a rising interest rate environment like we were last year, that really panics people and or not panic, but you don't know how to react. And once you start to see a little stabilization, even if we're still going to see interest rates rise, people start to be able to factor that in and look at their business plans. It makes for being cautious. And as bankers, I once heard us described as an industry that you want your banker carrying an umbrella on a sunny day because you just don't know. So that's what a banker or you as a business person should really be thinking is, I don't know where all of this is going to go, but what are the variables that may impact my business and how can I be prepared?
Well, let's actually stay on interest rates for a second, because I'm sure that's folks' favorite topic. But for the people in this room, there are probably two camps of us, right? There's some who don't remember the high interest rates in the 80s and 90s, and there are some of us who never experienced that. So all we can think about is what's happening now. But when you think about today's rate environment, what do each of you think is like what makes something a good deal today? Whether for your clients, your business, what's a good deal in today's environment?
That's in the eye of the beholder. But I do think it goes back to quality. I was having a conversation earlier. If it's around real estate, your prices are not going to go down on real estate. They may moderate and not grow as fast. And you might not be able to develop that property, or you might not be able to do some of those things, but you may make the decision to acquire it. But that will require additional capital because the cost of borrowing has certainly gone up, and you're going to have to, you're really just going to have to make the equation of how you're going to finance that project is going to require something different. All of us have said here, we come at it from different perspectives on interest rates.
You got to bank the right people. Good people will get you through the peaks and valleys of the economy. But one thing we are doing, Ryan, is we're doing a lot more stress testing now than we probably have in 10 years. We bank a lot of operating businesses at Service First, and some companies that looked really good at 3 and 4% interest rates don't look so good at 7-8% interest rates. So we're doing a lot of stress testing and making sure we are advising our business clients appropriately to make sure that they can continue to grow their business and do it in a good manner.
Yeah, I would just hit on that one point about businesses is really understanding your business dynamics. Number one, what are your costs? Or when you look at your costs, how much are fixed versus variable? And so you got to look at, if you scale your business up, what it's going to cost me. And if my business drops off, how much can I move really quickly? So, and then the most important thing right now with inflation still dealing with that right now is how much of my cost increase? How much can I pass on to my clients? And if you don't have the ability to pass on those costs, that's just your margin shrinking with every tick. And you got to understand, can I stay in this game or do I need to do something different? And I think that's the point a lot of businesses don't realize until it's too late, that ability to pass on that cost to the end users to keep their profit margin they need to stay sustainable.
The previous panel shared some accolades that Nashville has received over the years, and around this time last year, the real estate company Clever actually named Nashville the number 15 city to start a business. Considering that ongoing growth and all the opportunity that may be coming here, how are each of your respective institutions looking to provide the necessary support for those businesses, both big and small? And then I'd follow that up with, is there anything that entrepreneurs should know if they are considering Music City to start their business?
I'll start. Obviously, and they covered it earlier with the other panel. I mean, Tennessee's still a very business-friendly environment. Low corporate taxes, low state and local taxes. Believe it or not, we're still considered an affordable place to live. I think that is changing by the minute. But we have, all of us here in this panel have a responsibility, even with these rising interest rates, and whether we're going through a recession or a correction or whatever word you want to use, we've still got to make sure we're providing capital to business owners so they can keep growing their business, keep the economy going. But overall, Nashville is still one of the most business-friendly economies in the country.
I echo that. And it's also a very entrepreneurial city. It's a very welcoming city. Banks have our role in it for companies that are a bit more established, but there continues to need to be that angel and next level capital for some of those businesses, but that continues to grow here because that is one of the things that over my career I've really noticed and watched versus other markets that I've covered is the very good ecosystem for entrepreneurism and starting new business and starting new ideas. So all of the things that Brad just mentioned create that environment, and I think we have the ability to sustain that.
And, being true, it's a very big bank. We just have a unbelievable platform that we can help all companies from all segments, from small businesses, SBA loans, to taking companies public, and all unique tools like new market tax credits, CTC loan. So all these very incredible tools that are out there that can really be helpful, especially when your capital stack is tight and you need that equity. We just have a pretty good view of what's going on overall and can be really creative with our clients.
Yeah, so kind of in sticking with that as well, we're talking about, rising interest rates and inflation, but recent CPI data actually showed that inflation may be slowly cooling. So we know there's a lot of work that needs to be done, at least as it relates to that. But is there a possibility that we may now be entering a deflationary environment? And what do you think that would mean for Nashville and the surrounding areas?
I'll jump in first since the other guys have already done it. Even if I don't see that in any near future, but if we were to see that, Nashville is one of the most resilient economies. If you really go back generationally, how our business environment has changed. Well, healthcare and music have been a core, and state government's been a core, the university systems. We used to be the printing capital of the world. Well, that doesn't exist anymore. So, and publishing. So we still have a lot of publishing, but it's digital now. So our businesses have changed, and we've had an industrial base that's changed from the type of manufacturing we've done. So, and the logistics that we have here. So just the underpinnings of our economy. And once you're on the kind of growth trajectory that we're on, you don't turn that off. So I don't see that anywhere in our short or long-term future even if it becomes a more global or broader impact.
Ryan, like I said earlier, I'm biased. I was born and raised here. I think it's the best economy in the world, but we have such a diverse, like he says, such a diverse economy: education, healthcare, tourism, manufacturing. Not any one thing gets affected depending on what's going on in the economy, which makes us so resilient. But we also got to keep in mind that there, I think I don't like the word recession. I'm a banker. I don't like the word recession, but I do think some things need to be corrected, right? So if 18 months ago, somebody built $1 million home and it was worth 1.3 million about 90 days later or whatever it was, that we're not going to be doing that right now. And I don't think values are going down, but I think we're going to have a little bit of a correction on the growth trajectory that we had on some of the real estate.
I would say, as I stated a little bit earlier, I think the Fed is in a reactive mode and sometimes they overcorrect. So you could potentially see a drop, and I'd say nationally, not just Nashville. I think we could see a national slight recession, but it just depends on the market. Every market is different. And the thing that's so different about Nashville is a destination spot. People are relocating from the West Coast, East Coast to Nashville, which generate additional growth, new employment, and just look at the economy. I mean, how many people looked at a private school lately, tried to get into a private school? You're on a wait list. You try to go to country club, you're on a wait list. That's not recession-like. I mean, right now, it's just because of the influx of people from the North, East, and the West Coast. Nashville puts us in a whole different dynamic. And if it is a recession overall, Nashville, I guess it's kind of like if they get the flu, Nashville might get a cold. And I just think that's the way you got to look at it. And just the positive nature of Nashville, the resilience, the business mix, the people, it's just so many dynamic things going from Nashville that I think it will minimize the impact overall. But like you said, the Fed is going to be reactive. In that latest job report, they're going to keep their foot on raising rates.
I think you're right. Look, Nashville's a place people want to be, right? Whether it's businesses or people moving here. So Johnny, I want to stick with you. You mentioned Truist is doing kind of some new and interesting things for clients, but another thing that I'm not sure this group knows about is that Truist just provided 1.25 million in funding to the Nashville Business Incubation Center. So I'd like for you to talk a little bit about that. Why? Tell us about that partnership. And then you also announced the Truist Where It Starts initiative. And I'm not sure folks in this room are familiar with that either. So can you talk about that and maybe why you're doing that, what you expect to see, how that's going to help Nashville, and kind of just give this group an update?
Well, when we started on this journey a little over 3 years ago with BB&T and SunTrust merging to become Truist, we made a commitment to spend $60 billion to really make every community we in better. And we're sticking to that. And we made the investment in the Nashville Incubation Center because one of the big things about economies and you talk about affordability is how do you help every segment of the community participate in the economy? And we see a big opportunity for minority businesses, female-owned businesses getting established in Nashville. And that's why we said, hey, you can talk a lot, but when you put your money out there to really try to drive change, and that's what we're doing. We feel like it's a big opportunity for women-owned businesses and minority-owned businesses in Nashville to really step up their game and be a bigger part of this economy. This robust economy here, we got to help all segments grow. And the start here was just another program. It just furthers that on a national level where we're saying, okay, we're going to try to help people who maybe have been uneducated, can't really get into a job that could pay a meaningful wage. How do we help those people? And bottom line is we're trying to do programs to sponsor to help them get the skill sets to be in industries they hadn't historically participated in, like the financial industries. You know, it's just not a lot of minorities at high level participating. And we're just trying to put our money to do things to help grow our communities, because our purpose at True is to inspire and build better lives in communities. If we don't deploy our capital back into our markets, build our communities, because when we understand, when we build our communities, we build our banks.
Absolutely. And I think, UBS has had a partnership with them as well. And it's pretty incredible the types of things that I think our local community is able to do when it comes to helping business owners. Just out of curiosity, what types of businesses are these folks wanting to start? Is there a theme? Is it all over the place?
I think it's all over the place, but in Nashville, the construction and business is doing well. I mean, it's providing services. I mean, it's all across the board. We're agnostic to, hey, what do they want to be in? But what we want to do is make sure they learn how to be good business owners, that they understand their variable costs, their fixed costs. They know what it takes to run their business, the capital needs and understanding. I think a lot of people understand they collect receivables, they get all their cash and they say, I made money, but that's just turning in your receivables. You hadn't made money. You got to look at your income statement to really understand you made money, and then you can start buying things. But you got to save. It's all those dynamics. Understanding your capital. How do you redeploy your capital, and when does that capital? When can you take it out and be used for personal uses? Because a lot of small businesses, they're all together. It's one big pot, and it becomes problematic when it gets tight.
Yeah, they're competing a lot of times for the same funding. So Bradford, over to you. You actually interviewed also with Invest. I don't know, it was maybe a few months ago, but you explained how Services First new Broadwest location was ideal for both the bank and its clients. But I think what's interesting across the banking industry, we are seeing some physical locations consolidate, and so there's some discussion around that. How do you view, Service First Bank's locations? Are they supporting local businesses? Are they supporting the bank's, internal operational considerations, or how are y'all thinking about your locations in this environment?
Sure, thank you. No, we're thrilled to death to be in the Broadwest development for our long-term home. A little bit of background: we started Service First, the Nashville region, back in 2013. We were at, I guess it's called the Tennessean building now, but I call it Old Palmer Plaza. But we were there. We had employees spread over 2 or 3 floors, and we're looking for that permanent home for us, and Broadwest just made so much sense for us. We are a branch light model, unlike Truist and Regions to a certain degree. We spend a lot of money on our technology. We want to go to our clients. We don't want our clients to have to come to us. But you still need that, one or two locations in a market to serve them. And that's why being centrally located there on West End was so important to us, Ryan. And it's great for our employees. Listen, we've got employees that live in Hendersonville, Smyrna, Franklin. So being centrally located was paramount for us as well, and having some visibility right there. But we've also got some great new meeting space now that our clients can use. They can come, have lunch and learns, have offsites in our space. They visit with us, we visit with them. Just was a really good situation for us. The branch situation, I think the pandemic kind of proved out that consumers and business owners don't have to walk into a branch to run their business, to pay their electric bill, to do what they need to do. As long as the banks that they work with have really good technology, which I know all these banks represented up here all have really good technology. So I wouldn't be surprised if Johnny and Lee aren't constantly looking at and trying to make decisions on where does it make most sense for our branches to be? Do we need what we have? Service First kind of started much after these guys, 2005, and we've always had a branch light model, so we don't have a lot of branches to begin with. Just a really good, robust online banking system.
Look, it's about access, right? I think the world changed, clients have changed, how we all do business and want to work has changed. So that's exciting. Well, welcome to Broadwest. Lee, over to you. So you've been involved in banking in Nashville specifically for a number of years. So in Nashville, around Nashville, tell us throughout your career, how have you seen local banking change? How have you seen financial services change? And what do you think in terms of banking impact? How has that impacted Nashville the most, just as you've seen kind of this industry evolve over the last your career?
That's a great question. You could have a great board game on names of banks and stuff around here. But I'd first like to say that I get the opportunity to represent over 1,000 associates, Regions associates in across all of our markets in Middle Tennessee. We're the longest continuously operating bank. And what I really like is that our associates reflect the communities we live in. So we really see our communities and are able to react to our communities and be involved in our communities. And we've got a lot of great competitors in this market. And that's what I will tell you is while being based in Nashville, I have worked other markets for our company over my career. And Nashville is one of the, if not the most competitive market, which is a great benefit to consumers because there's more access, there's more competition, and there was a day that when I started my career, there was really principally 3 banks that were here. Now there's almost 80 banks that are operating here. And there's no real concentration. If you go to Charlotte, where a number of banks, but or Atlanta, there was still a core major bank, and it's still a little concentrated. Nashville's very fragmented, and it's very very competitive. And I think again that's everybody wants to be here, whether you're a community bank, whether you're a money center bank, whether you're a regional bank, it's all along the spectrum. And again, that's healthy for the economy. That's healthy. It's the growth pains that we heard in the other one. It's the growth pains we'll hear in the latter one. I think our responsibility as bankers is that we have to serve all of our communities, and that's going to get probably to one of your future is how do we sustain, affordability? How do we sustain prosperity for everyone? How do we engage in workforce development? All those are all 3 things that we as a bank, and I know my peers here, that our organizations are thinking about, because we're only as good as the communities we serve.
Well, that's actually a good lead into what I wanted to ask next is I think it is up to all of us and everyone in this room, we do have to work together, right? To make this a community where people want to move and they feel like they can thrive. And I'd be curious to know from your perspective and y'all's background, what do you think the key issues today are where we need to get the policymakers, the businesses, our community influencers, and all the different stakeholders on the same page to ensure that Nashville does continue to be successful and be a place that people want to move?
You guys want the newest guy to answer that question?
Fresh
Well,
perspective.
I think the interest rates and consumer spending, I think I look at that as short term and things that we'll get through. Nashville will get through better than most. But being somebody that was born and raised here, I think to me, the longer term challenge we've got to get a handle on is just how do we handle all this growth? It's fantastic, but from an infrastructure standpoint, mass transit standpoint, we've got to start thinking about that yesterday. Because if we're not careful, what we don't want to do is be a city that gets affiliated with certain monikers like Chicago. You think of crime, Atlanta, you think of crime, New Orleans, now you think of trash, Austin, you think of a homeless problem, which started with an affordable housing problem. So we need to be thinking about those things and try to stay out in front of it best we can. But as a longtime resident, that's what I worry about most.
I think you're spot on, but I think this transit and housing, is great if you have existing homes, but the housing market in Nashville is unbelievable. And it's just something that the general working wage person, they've just been pushed out of the market and they're being pushed further out. And the problem is when that happens, who's going to be at the hotels, who's going to do all that work if they can't get back? So either you got to have housing close that's affordable, that's decent, or you got to figure out how to have that commute better. And that traffic in the morning is not pretty on the interstate and where you go. So that's a big dynamic, but that's a dynamic a lot of cities have, but that's something Nashville's got to do. And, you got to look at the growth. It's not going to stop. Developers, they're going to keep developing until the occupancy gets down to 80 or less. They're going to keep developing. And that's just how it goes. And so Nashville is going to continue to grow. And, you got this indoor arena for the Titans. I mean, what that does for the city, now you become a top tier city just across the board, because now you can do Super Bowl, you can do the Final Four. It's nothing Nashville won't be able to do because all the hotel structures in place. You can host any event that you want.
Are you putting your name on that building?
I will finance it, but I'm not putting my name on it.
Anytime I get a mic and anyone who's listening, I just say I want more sidewalks, right? So we can be more walkable. But I heard that on the previous panel, so I'm excited about that. I think we are at time, but is there anything, just final thoughts that you would want to share with this group today?
I think my peer said it, but I think we really got to work on this shared prosperity and workforce development. We've got people that we need here in our communities that need to share in this, and we have a responsibility as bankers, along with all of us in this room to do that, along with the affordability, the infrastructure, all of the other items that are there. So,
Well, thank you all for being here, and thank you for having us.